Good evening, dear friends. Today, I would like to, this is Harin here, via Western Region Chairman, ANMI. I would like to welcome today our esteemed speaker from BSE. As you are aware that BSE has changed its expiry date on a single stock derivatives to second Thursday, which will come into effect from the 1st of July. And for this, to understand and help us better do the volumes on the exchanges, I would like to invite the speaker and give us some minor presentations, and we can take the Q&A session later. Yeah, Deepak, please continue.
Thank you very much, Harin bhai. Thank you very much, Sheetal. First, I would like to share my presentation. Give me a moment.
Yes.
Yeah, we can start. We can start. Good afternoon. Can you hear me, Sheetal?
Yes, sir. Very much. Very much. You can start.
Thank you. Thank you very much. Uh, so, I am Deepak Chaudhary on behalf of Bombay Stock Exchange. I would like to welcome all the participants for today's webinar. Special thanks to entire team of ANMI, Sheetal, and Western Region Head, Sri Harin Mehta ji, for giving me this opportunity to speak about the new developments in BSE equity derivative segment, and also to speak about the new talk of the town, which is the launch of single stock derivatives on BSE with effect from 1st July and with a special second Thursday expiry. So thank you very much for joining today's webinar. And now I'm moving to the slides for the presentation. So friends, as you know, BSE derivative segment we launched BSE, we launched SENSEX and BANKEX derivatives in the month of May 2023 with a revised expiry cycle of Friday for SENSEX and Monday for BANKEX. So the idea was to give some new product to market participants to try. SENSEX is a very popular index. Each and every citizen of this country knows about SENSEX. When you talk about markets, you talk about basically SENSEX. So entire India believes that SENSEX is the most tracked and most popular benchmark index of India. Not only in India, when you talk about international, the Indian markets internationally, then also the foreign market participants also talk about Indian index, that is SENSEX. So the idea was to give SENSEX tradable product to the market participants, and with that view, we launched SENSEX derivatives, both futures and options contracts with Friday expiry. Since the beginning, in the May 2023, it started taking off gradually, and week on week, we saw increased participation, both in terms of number of clients traded, number of contracts traded, the building of open interest in weekly contracts as well as monthly contracts. At the same time, we saw increased number of member participation week on week. Today, if I talk about some numbers, BSE derivatives sees participation of around 450 stockbrokers and millions of customers on a weekly basis trade in BSE derivatives, which was practically dormant about a year ago, before May 2023, in which we launched SENSEX and BANKEX derivatives. So basically, this is all about the success story of BSE derivatives over past 1 year. With the success of index derivatives, now BSE is also planning to venture into stock derivatives, where you have more than 180 plus stocks getting traded in stock derivative segment. So currently in BSE equity derivatives, we have trading activity taking place only in SENSEX and BANKEX, but with effect from 1st of July, we expect that a good amount of activity we will be able to attract in stock derivatives also, with the kind of product we are bringing. First, as I said, let us talk about some numbers which we have achieved in past 1 year as far as SENSEX and BANKEX turnover is concerned. So as you see in this slide, in the first box on the top, we launched SENSEX derivatives in the month of May 2023, last year. And the first expiry of SENSEX derivative with a Friday expiry, which we have already spoke about, fell on 19th of May. So on 19th of May, if you see, we started with a very, very small number, and we reached the 101 lakh crore notional turnover marks somewhere in September last year. And from there is no looking back. BSE recorded milestone almost every month. And the highest, which last Friday only we achieved the highest turnover in SENSEX, that was 423 lakh crore of notional turnover, and close to 52 crore contracts got traded last Friday. At the same time, the open interest is also increasing. Close to 90 lakh lots of open interest, intraday open interest, was built on Friday in SENSEX derivatives. Similarly, in the bottom, you can see the notional turnover figures of BANKEX derivatives, wherein we started the BANKEX derivatives with Monday expiry. Always remember, SENSEX has a weekly expiry cycle of Friday. Every Friday, SENSEX contracts gets expired. But BANKEX has a weekly expiry cycle of Monday. So on Monday, every Monday, you have BANKEX, banking sector index, getting expired on BSE. So we launched BANKEX derivatives with Monday expiry in the month of October last year. So practically 8 months have passed, and within 8 months, we are able to achieve a turnover of 164 lakh crore last Monday. I mean, day before yesterday only, we achieved 164 lakh crore, close to 19 crore contract, 90 million contracts were traded yesterday. And BANKEX is also building very good open interest in BANKEX contracts. So this we have already spoken. This was basically of last to last week. That was 7th of June for SENSEX and 3rd of June for BANKEX. But after that, we have achieved the new milestone last week. So we have already spoken about this. Now, as I said, after the success of index derivatives in BSE stock future and option in BSE equity derivative segment, we are now planning to come up with single stock derivatives. So basically, when you talk about equity derivative segment, you have 4 products. That is index futures, second is index options, third is a stock future, and fourth is stock options. So as I said, we already have SENSEX and BANKEX index derivatives, very successful contract. Both futures and options contract are very successful in BSE equity derivatives. And every day we have hundreds of members participating in BSE equity derivative segment. So all the member brokers who have started trading in SENSEX and BANKEX, they have their infrastructure ready with BSE equity derivative segment. All their platforms, be it dealer terminals, internet-based trading terminals, IBT platforms, or mobile trading platforms. Many members are connected through algorithmic trading softwares. So entire infrastructure at members end is ready. So we with the launch of SENSEX derivatives, it will be easier, smoother rollout for BSE among the market participants as far as stock derivatives is concerned. So from 1st of July, you have a new product in the market, that is BSE stock derivatives, both stock futures and options on close to 180 stocks with a different expiry cycle. And this expiry cycle on BSE is second Thursday of every month. So it will be basically a monthly contract. In stock derivatives, monthly contract are getting traded. So at BSE also it will be a monthly contract. So contracts of first month, second month, and third month will be available. So when I talk about the starting of the contract on 1st July, so on 1st July, you will have 3 contracts on each stock. That is July expiry contract, August expiry contract, and September expiry contract. The July expiry contract will expire on 11 July. That is the second Thursday of July. Similarly, the August contract will expire on 8th of August in BSE. That is the second Thursday of August. And likewise, we will have expiry on a second Thursday every month. So let me talk about the value proposition of BSE single stock derivatives. So as I said, it is going to be live from 1st of July 2024. That is Monday, coming Monday. Second, it will have unique expiry date. So currently you are trading basically the end of the month expiry. You have stock derivatives expiring on last Thursday of the month. So as per current structure, if you see your July month expiry contract on the other exchange will be on the last Thursday of the month. That is, I think, 25th July. But here in BSE, you will have expiry on 11 July, around 15 days prior to the last Thursday. So basically, practically, now market participant will have 2 contracts expiring on each stock, one at BSE and one at other exchange. So every month you will have 2 contracts of stock derivatives. Now, BSE will be, with this product, BSE will offer an additional platform for hedging, because this stock derivatives contract are being used by the market participants as a hedging tool, because a large number of market participants are holding stocks in their portfolio. And based on their hedging requirement, they look for opportunity in the market and the available contracts, which is there on the exchange for hedging benefit. So basically, with this contract, market participants will have an additional expiry cycle for hedging their stock specific risk. Now, what is more additional benefit if you trade on BSE? That is the transaction charges. So basically, these transaction charges you pay to the exchange when you trade on any contract on the exchange. So BSE does not charge any transaction charge on a stock future contract. So there is absolutely 0 transaction charges for a stock futures. Now, stock options, basically you pay transaction charges on the premium value which you trade on the exchange. So on premium value in BSE, we have only 500 rupees per crore transaction charges, which is basically around 90% lower than the competition. So that will be another benefit if you trade on BSE stock future and stock options contract. Basically, when you use derivative contract for hedging purpose, you are always concerned about the cost, basically cost of carry or cost of transaction. So this transaction charges adds up to your break even. So if your you save transaction charges, money saved is basically money earned. So in that sense, in BSE you will have lower kind of cost in comparison to the other venue. Now, what are the additional benefits? So as you know, with the implementation of interoperability across the equity derivatives and currency derivative segment, now your deposits, your collaterals, your stocks, whatever you have placed with the clearing corporation, that is at one place, that is at your clearing corporation, or at your, if you are a trading member, then it is kept at your clearing member. With that particular collateral, you can trade at both exchanges. So there is no need to keep separate kind of, or allocate separate kind of collateral for BSE equity derivatives segment. So it is basically clearing corporation is one clearing corporation, and the collateral is at segment level. When I'm saying segment level, it is you can trade in any of the exchange in that particular segment for which you are keeping collateral with the clearing corporation. So that is the benefit which you will be getting in both index and stock derivatives product in BSE. Secondly, the calendar spread margin benefit will be provided by clearing corporations across expiries, across exchange, across stock future and options contracts. So what is calendar spread expiry? Suppose you are, so basically you are making position, creating position in one contract, that is July contract, and at the same time you are creating an opposite position in the August contract. So that is kind of a square of trade, but the expiries are different. So basically the risk is hedged. So in that kind of position, the margin benefit is provided, certain margin benefit is provided, relaxation is provided from the clearing corporation side. So that benefit will be available across the exchange. When I'm saying across the exchange, then BSE has middle of the month expiry, that is on the second Thursday, and on the same contract, same underlying contract, on other exchange, the expiry cycle is last Thursday. So there is a gap of 15 days. So that calendar spread margin benefit can be availed by the clients or members on the positions across the expiry, across the exchange also. So one position at in the same security, one position at BSE, and one position in the last Thursday of the last Thursday expiry of other exchange. There also you will get the margin benefit if the position is basically hedged. One more important point here is, as you are aware that in derivative segment, if you keep your position till expiry, then it is delivery settled. It is physically settled by giving or taking the delivery of the stocks. So in that case, the delivery obligation of FNO segment on the final expiry day is netted off with the delivery obligation of cash segment. So basically, there is one settlement in cash segment, and cash segment only that delivery obligation of FNO segment on the final expiry day is netted off. So that benefit also is available if you want to do that kind of a strategy on the final expiry day. So how the expiry calendar of BSE will look like? So in this slide, you can see the contract months. I have just given it for next 6 months, basically till December 2024, and it will continue in the same type after December also. So for July 24, our expiry will be on 11th of July. That will be the second Thursday. For August, it will be 8th of August. So अगस्त में 8वें दिन ही आपको एक्सपायरी मिल जाएगी. सितंबर में थर्सडे 12th of September, October 10th of October, November 14th of November, and December 12th of December. Also, when there is a trading holiday on Thursday, then the expiry will be preponed. Now coming to the single stock derivatives contract specification. So the contract specification in BSE is very simple. There is no difference other than the expiry day. So all the parameters remains the same as you are trading on the other exchange. Everything is going to be remain the same. Underlying is when we talk about underlying asset code or underlying name. So underlying will be the eligible equity stocks. So currently around 182 stocks are there. So all we will be launching derivative contract on all 182 stocks. Asset code will be as per BSE contract master file. It will be similar as the other exchange. Tick size will be 5 paisa. contract period will be 3 serial monthly contract. So always remember, it will be a monthly contract with a second Thursday expiry cycle. Many dealers, many clients may get confused over here that it is a weekly contract. No, this BSE stock derivatives contract is not a weekly or fortnightly contract. It is a one contract in a month. The only difference is the expiry is on the second Thursday of every month. Trading hours again 9:15 to 3:30, just like equity derivative segment, other products of equity derivative segment. Strike price interval will be as per contract master file of BSE, which is published on a daily basis. Premium quotation in case of options will be per equity share. Exercise type will be European style. Minimum number of strikes. So in when you talk about options contract on stocks, there will be minimum 15 strikes for both call and put. 7 in the money, 7 out of the money, and 1 at the money contract will be available at any point of time. And based on the volatility in the stock at end of the day, new contracts will get generated and added up in the system, in the contract master file for next day basically. Last trading and expiry day, sure is the difference basically. That is, in BSE, you will have second Thursday expiry. Pre-trade additional margin. So as I said, single stock derivatives contract are physically settled if held till expiry. So if you are carrying your position till expiry, then prior to that, from the 4th day, prior to the expiry, which is the second Thursday, you will be liable for paying additional pre-trade expiry margin to the clearing corporation. Now, additional pre-trade additional margin you are paying currently for the last Thursday expiry if you are carrying the position till the last Thursday. Similarly, in case of BSE, if you are carrying your position till Thursday, till second Thursday, then you are paying the additional margin for BSE to your clearing corporation from the first week onwards only. That will be, I mean, prior to second Thursday, it will start from previous Friday onwards. So Friday, then Monday, then Tuesday, Wednesday, and final on Thursday. So there will be a span-based margin as per margin additional pre-trade additional margin requirement of clearing corporation that will be levied to the clients who have the open position. Settlement type is basically delivery settlement, and in case of basically futures contract, it is delivery settled. But in options, when you have a position which is in the money at the time of expiry, those contracts only get delivery settled. And final settlement price will be the underlying stock price on the final expiry day at the closing of trading hours. So what are the opportunities for market participants? We have already spoken about this a few minutes back, but let me go through once again. So hedging, it is an additional hedging instrument with a different expiry cycle, that is second Thursday of expiry. So more opportunity for the market participants. Many market participants are interested in cash to future kind of strategy. So when you talk about cash to future, currently you have future at only one venue. Cash market is available at both exchanges, but futures is available on stock derivatives at only one venue. So now with BSE second Thursday expiry, you will have futures contract at both venue. So you will have multi-segment, multi-exchange opportunity in both cash and futures market. Similarly, futures to futures opportunity. Currently, there is no futures to future opportunity because the futures contract of one exchange is liquid, but on the other exchange, it is not liquid. But with the launch of second Thursday expiry, we expect that sufficient number of participation will be available from day one on BSE, and you will have a very good opportunity for future to future contracts as well. There are many strategies which are based on futures to option. So many market participants who are interested to do that will have multiple futures and options strategy across exchanges. Option to option, I mean second Thursday versus last Thursday, that will also be available. Now, many market participants might be doing index FNO with stock FNO constituents in the cash segment or in the FNO segment, that kind of opportunity will also be available at BSE leg also. Coming to the physical delivery nature of stock derivatives contracts, this is very important, especially when you are talking about to any of your investor, any of your client. You must speak about the physical delivery nature of a stock derivatives contract. So basically, unlike index derivatives, when you trade in stock derivatives, both futures and options contract, you should always keep in your mind that stock derivatives, if held till expiry day, that is in case of BSE, the expiry day is second Thursday of every month. So suppose I am creating a position in the month of July contract on 1st July, then I should always keep in the mind that if I am carrying my position till 11th of July, there may be chances that delivery will be marked to me based on my position, either bought or sold. So what kind of position will get into what kind of obligation, that is what I have explained in this slide basically. So here you can see futures, your futures, if you have bought futures contract, and if you have bought call option contract which has converted into ITM, and if you have sold put option contract which has converted into ITM, in all these three cases, you will have obligation of paying fund and you will receive the security as a delivery. On the opposite cases, where you create a position in future, short position in future and short position in call option and long position in put option, and these options contract convert into ITM at the final expiry day, then you have basically the delivery obligation of securities, that is you will have to pay the securities to the clearing corporation and you will receive the funds. Always remember that on the final expiry day, your positions of FNO gets netted off with the obligation of cash segment. So whatever obligation you have on the final expiry day in the stock futures and options contract, you can create basically an opposite position in the cash segment, and the netting will be done by clearing corporation. Now, as I said, BSE will be launching derivatives contract on all 182 stocks. But there are some stocks which are part of major indices. So for example, SENSEX, BANKEX, and SENSEX and BANKEX both are very liquid derivatives contract, both futures and options contract of SENSEX and BANKEX. Weekly derivatives are very much liquid on BSE. So I have listed around 56 stocks which basically are part of the major indices. These 56 stocks are very much liquid. So market participants can focus on these 56 stocks from day one, that is the relaunch of BSE stock derivatives on 1st of July. So with this, I would like to thank all the market participants for joining today's session. If you have any query related to BSE stock derivatives relaunch, or you have any query related to BSE SENSEX and BANKEX futures and option contract, I will be happy to handle the queries. Thank you very much. And once again, thank you very much to the ANMI team, and a special thanks to Harin Bhai for giving me this opportunity to speak about BSE derivative segment. Thank you very much. I'll be available for the Q&A session. And along with me, I have Sri Rajiv Garg, who is the Senior General Manager in Business Development function in BSE. So please ask your queries. Thank you very much.
I request all the members to put their queries on YouTube chat box, please, if they have any. Deepak ji, we have received one query in advance. I'll read out the question. Will there be monthly expiry also in addition to fortnightly expiry? How about physical delivery of shares, if that could be clarified?
So let me clarify on this front. There is no bi-monthly expiry. It is a monthly contract only. The expiry is second Thursday of the calendar month. However, the maturity of the contract will continue to remain the monthly contract only.
Okay.
And as far as the physical settlement is concerned, so on the day of expiry, the positions which you hold in the cash market as well as in the futures and options, both will be adjusted against the pain on the settlement day, that is T+1 of the expiry day.
It seems that members, they don't have any questions like we can wait for 5 minutes and then probably we can wind up.
Sure.
I think since it's a new product, so we don't have any questions.
Yes, Sital, this is going to
Yeah,
be a simple product, and I think
right,
market participants are aware about the single stock derivatives contract because they
right,
must be
right.
trading it since a long time. So the only difference is basically it is in BSC, that is first, and second, it is with a second Thursday expiry.
Right, right. Okay, so I would deliver vote of thanks. I would like to thank Team BSC, Deepak ji, for conducting webinar on single stock derivative uh, expiring on second Thursday. I'm sure members have got fair idea about it and they would start trading into it soon. I also thank Harin Mehta sir for his welcome remark, and I thank members to join in for today's webinar despite of their busy schedule. Thank you very much, Team BSC. Deepak ji.
Thank you, Sital. Thank you, Harin Bhai.
Thank you
Thank
very
you.
much.